Hi everyone, welcome to Crazy Trades 24/7. In this live stream, we are going to focus on gold, silver, Bitcoin, crude oil, and all the major and minor forex pairs. We still have around 30 minutes left before New York session opens. So without any further ado, let's get started with gold. Yes, this is gold, and today gold is showing some bearish biasness. Give me a second. So let's begin with gold. Today we have seen a big decline on gold since yesterday only. You have seen the decline that came after price when price retested this level of 4,116. Since then, price is forming lower lows and lower highs structure, and it has continued till this important support here. This level is 4,022. It seems like on the intraday time frame basis, price is given a breakout below it. But since it has not sustained below this, we cannot consider this as a breakout. However, if price consolidates at this current level and then it gives a breakout on the lower direction, then we can think of it as a confirmation for the breakout, and initiating a fresh short entries would be a nice logic here if price gets below this level of 4,016. But as of now, we had already entered this trade here at 4,033. So let me explain my logic for this trade. If you look at from the 1 hourly time frame, when price gave a bounce back on 17th July, this complete upswing, this was the correction for this upswing. And after this correction, when price again started to rise, we were expecting this swing to last at least to give a breakout above 4,166. But price couldn't. I mean, gold failed to give a breakout above this, and it started to decline from a midway. The main reason behind that was obviously the weakness on the gold and all the major geopolitical situations that you guys are already aware of that's going on. Because of this very reason, it couldn't continue further from this level of 4,166, 116, and it started to fall. So following to this, we were expecting price to give a breakout below this 4,022 and then continue to its ultimate base here and take support of this level. So our outlook was overall on the bearish direction. Hence, we were looking for short trades. This is for sure. And you can see here when price after the yesterday's decline, after the decline that started yesterday, price had retested this level of 4,044, and at this level price has started to consolidate. This consolidation breakout we were expecting on the bearish direction, and as and when price gave a breakout on the first breakout, we didn't initiated any shorts. We waited for price to revert back because we were not comfortable for this breakout. The main reason behind that was the kind of consolidation price had shown earlier. We were expecting some considerable consolidation, and then only we would be interested into taking fresh shots. But when the first breakout came up, this consolidation was not enough for us to convince for taking short entries. So we waited here, and rightly so. After the wait, I mean, price again reverted back to the upper levels, and again it started to consolidate. And soon after that, when price gave a breakout below this red candle's lower wick, which was intact here at 4,034.79, we initiated our fresh shorts at 4,033. We were expecting a decline here. But one thing which was bothering us was this level, 4,022, because this is also a significant level because the kind of decline that it had supported earlier. I mean, after this big downfall, price started to take some support at these levels and had reverted back from these levels. So this obviously and definitely holds some kind of bullish pressures here, and strong buyers are lying on these levels. So this was our fear, and price had retested this level, given a breakout below it, and again has showing some pullback strength. We can call this as a pullback, But the real problem is if it starts to continue in the upward direction, then we might be caught off guarded and our stop loss might be at threat. Looking at the structure, it make more sense for us to exit our trade if price starts to rise again. So we have already trailed our stop loss to the level which at which we entered the trade, so that we could shouldn't uh, you know have to carry a lot of loss for this trade. So we have already shortened our trade limits here, stop losses. And now this trade is risk free. If it goes in on the upper direction, we'll exit this trade. Because of this important support level, this I'm feeling very discomfort for taking fresh, short entries here. Ta- Shorting at the support is obviously most of the time it's fatal. So we should not be doing that. During the life of this trade, we did have, gained at least uh, 17 to 18 points, which accounts for 170 or so. As you can see, at the level at which we entered this trade, from that very point, price is clearly facing some real good rejections, which is quite good for our case because we have entered a short trade here. We should be expecting price to move in the lower direction. Ideally, it should move because it has given a breakout below this 4022 level, and this is a pullback for that. But let's not forget that this is a support, and at support, there is a tendency. First tendency for the price at support is it shows the bounce back, and only if price has consolidated for a considerable amount of time at a support level, and it has clearly, showing its tendency to give a breakout on the lower direction, then only it gives a breakout. Otherwise, most of the time, it tends to give a bounce back. So this is the reason of concern for us. But however, our trade is currently on a profitable side, so we should not be worrying that much as well. And if it reverses, we have our stop loss placed at the level which we entered, which is 4033.5. So yes, this is gold for us. Next we have silver. And on silver as well, silver has given a downfall of around 1.8% today. And if you look at the complete outlook, it seems quite bearish to me. Looking at the this price chart, you might call this as a support level, and price is taking support of this zone. So from here on, it might give a bounce back. But I don't buy this theory. If you look at from the higher time frame, let me pull up the chart for. Yes, this is the 2 hourly chart. You can clearly see this is a breakout of this rising trend line. After the breakout, price has taken a support of this 57.057, which is a strong, significant level after the breakout of this rising trend line. So if you consider this as a support, and if price has already given a breakout below this level, and still you are considering this as a support, I don't think that's fair. And most probably it's going to give a breakout on the lower direction since overall trend is in a bearish direction. Just forget that there is some formation here. Just look at solely from the higher time frame. Like this is a 4 hourly time frame price chart. This is a one-way decline, and this minuscule breakout that price had given on 21st July, which has led the breakout of this major bearish trend line. After the breakout, it had got rejected from 60.936, and after the rejection, you can clearly see price took a kind of a correction for the previous upswing. And the next upswing that followed, the high of that upswing couldn't, breach the previous swing's high, which is yet again, second confirmation for our strong case on the bearish direction. Like uh, if price would have given a breakout above the 60.936, then we would have thought of that. Okay, now price has made a newer high, so from here on it might continue in the bullish direction. But since that was not the case with us, it has given a breakout below the previous swing low. So outlook here is still pretty fragile. I must say silver might continue its move in the bearish direction. And if it does, this would be the most important level because this is the level where price is consolidating after giving a breakout below the support zone. And if this consolidations continues, then the new support and resistance zone that price will form, that would be considered as a strong level for the breakout. If you are speculating on the breakout, that should be the level you should be watching for. Like if you look at from the 5 minute time frame or let's say 15-minute time frame, and this is the new range that price had formed on silver. Like this is the new resistance here, and for the new support, you can consider this level. Ideally, we should be considering this red candle's lower wicks, lowest low, which is 56.7135. So this is the by far the logical conclusion for this setup. If price give a breakout below this level, then we should be looking for fresh short entries below these levels only. So long entry doesn't make sense to me. Frankly, I have explained all the logics. And if silver is showing no signs of giving a bullish move, and gold is also showing some kind of retracement, then I mean, you cannot convince me for taking long trades on gold or silver. Silver is showing its, signs of decline further in the bearish direction. As if it gives a breakout below this level, then I think this complete formation is gone. It will, collapse just within, few seconds. So yes, we need to keep strong focus on gold and silver. Gold has again started to move in our direction. Yes, it it must continue. I mean, looking at the structure, I don't see anything, uh, any any difficulties in price forming newer low, which it had already formed. If you are asking me about the important support that gold might have on its way to the major support, then you can consider this as a intermediate support. And this is the exact level which we are currently focusing for our target. Like we have entered this level of 4,000 as our target for this trade that is currently opened here. So we would be expecting price to retest this level, and then after, if it want to, then it might give a corrective rally for the previous downswing that it would have shown till that time. So yes, clearly after a pullback, it has started to again return to the lower levels, but it is still quite early for us to say that. It might consolidate at these levels for some more time, and only after that it can give a breakout in the lower direction. Breakout had already occurred. I am not saying that price has not yet given a breakout, but we have seen on higher time frames generally when price closes below some particular important levels, then only people consider that as a breakout. But on a smaller time frames, I don't think that's a luxury we have. We have to go with the intraday flicks because if you wait for the closing, price is going to go. I mean, you're going to miss the bus. Yes, gold seems to be continuing in the lower direction after this pullback. The kind of these two candles market has formed right now, it seems like price has rejected its up move and it's continuing in the lower direction. If that is the case, no, this is a very indecisive moment. Price might, give a move on the any direction. Ideally, since the trend is in the bearish direction, we are looking for trade on the we are looking for the moves on the bearish direction, but it's currently situated at a support zone, because of which it's showing some bullish tendencies as well. So here at this point of time, we cannot really do anything. We have to wait and wait for the clean breakouts, and only after the breakouts we could be uh, eligible for taking any fresh entries. So currently this is gold, and we have already discussed silver, and next we have Bitcoin. And on Bitcoin, if you look at from 2 hourly time frame, price has given a breakout below this rising trend line, has retested this level again, and after the retest, it has got rejected, which is pretty what we were expecting yesterday. We were trying to take a short entries at these levels, but because of these larger volatility levels, we avoided those entries. And you can see after this volatility period was over, price has shown a clear bounce back and a kind of a pullback for this downswing. And after the pullback, it has started to decline again. And you can see how beautifully it has declined and given a breakout below 63,666. After this support zones breakout, price has given a kind of a consolidation, and it's been consolidating since the time it had given a breakout. Now, if this consolidation continues, then we do not need to do anything. Only if this consolidations come to an end and it shows conclusion and give a breakout on the either direction. Ideally, it should be giving a breakout on the bearish direction to continue its price structure. Like this is a kind of a strong decline, and after it has started to show a pullback. If you consider this a structure, you'll find it like a flag and pennant formation on a bearish direction. So it's a bearish flag and pennant formation, and on this kind of a structure, if price gives a breakout below this poles high, I mean, from the bullish point of view, it's called poles high, but if since it's in a bearish direction, it's poles low. If it gives a breakout below this poles low, then there is a another big move that might load, and we generally consider this big move to be as large as the previous first legs, uh, this first swing. So below this level, we might get us some really big move. So that's the reason we are expecting a trade here for the risk reward of 1.4. This is the level which we are looking forward to if price gives a breakout below 62,978. This is the arbitrary number. We are not looking at the exact figures. If this red candle's low gets taken out, then we would be able to take fresh short entries on Bitcoin for the target of price retesting these levels. This would be the first target. Yes, 61,954. Around 62,000, we would be expecting this price to continue in the lower direction. So this is again going to be a good trade. If you ask about the logic is pretty simple. Price was forming a good upswing. I mean, all the way since 1st July, price was forming a bullish structure, forming higher highs and higher lows. And upon getting rejected from the vicinity of an important resistance on the price chart. This is the probably the most important level as a resistance on this complete price chart, right? If price would have given a breakout above it, then our outlook would have shifted to the bullish direction, and we would be looking for long trades. But since price failed to give a breakout above this level and it broke below this rising trend line, and after the breakout, the confirming point was it again retested this rising trend line from the outer direction, I mean from outside, and again got rejected. And upon rejection, this is the important neckline which price had formed here. You can clearly see this was the first, second, third, fourth. This is the fourth instances. All the four times price had got a bounce back from these levels, and currently, like on today, when price give a went to retest this level, it gave a clean breakout below these. So our outlook has now shifted for selling, and we'll be looking for fresh short entries after every pullback. And currently, price is taking a pullback, and after the pullback, it's consolidating within a very narrow range. Upon breakout of this consolidation, it's safe to assume that we would be looking for fresh short entries. Ideally, we should be looking for fresh shorts below this red candle's low, which is 63,000. Let me check. Yes, its low is 63,021. Taking a short entries below 63,000 would be a nice idea. Then we can go for this. I have already placed some alerts here so that whenever price came to our trigger level, we get the notification first. Yes, gold has again started to continue in our favorable direction. Yes, now it's just we are waiting here price to give a breakout below this. If price breaks this level, then gold is done. I mean, gold can continue in the bearish direction like anything. Structure is already very weak, and price is no longer supporting its bullish move. Like after every good big up move, price is facing strong bearish rejections. You can clearly see kind of big red candles you are witnessing here on 5-minute time frame says a lot about the trend. Let's look at the Ethereum. Yes, very similar to what we saw on Bitcoin. Ethereum is also forming a kind of a structure where it got rejected from this rising trend line from the outside after the breakout. Right. This was the breakout we captured yesterday. Not yesterday, we captured this on 23rd July. And after that, we closed our trade at 1847. And after this beautiful trade, price went again on the upper direction, retested this level, and at the confluence of this rising trend lines rejection and an immediate resistance, which was a horizontal one. At the confluence of these two, price got rejected, and again it had started to decline. So we can expect this price to decline further till this support level. I mean, if this support level is broken, then it would be like beautiful selling opportunity for us on Ethereum. The support level is the last hope for this Ethereum. Price might give a bounce back from this level only. Fresh short entries we cannot initiate on Ethereum till the time price is above this support zone, because the risk reward is not going to be in your favor if you choose to take a fresh shot before price giving a breakout below this support. What if you took a short entry here and price bounced back from this support level? Then you'd be caught on the wrong direction. So it's always better to wait if you're not sure. So this is Ethereum. We have seen gold, silver, Bitcoin, and Ethereum. Let's check out gold once more. We'll be looking at gold after every 5 to 10 minutes just to get sense of how it's evolving. Let's look at the crude oil now. We have seen a decline of around 0.6% on crude today. And yesterday it was down by around 7.5%. We have seen that on yesterday's live stream. And today, if you look at from the price structure point of view, it had returned back to within this bearish trend line. This was the trend line which was earlier acting as a strong barrier for price from it was stopping price from moving further on the upper direction. But after yesterday's breakout, I don't see any strong significance of this bearish trend line anymore. But however, after retesting the level of 93.28, price has again returned back to its support level of 80. From the level of 80, it has taken support and currently it's trading at 81.47. From this level, we are expecting price to consolidate at the current level. Like you can clearly see after this consolidation, when price gave a breakout, the resistance of this consolidation is same as the support for the current is an immediate support for current price structure. Like this is the level above which crude is consolidating. If price continues to consolidate at these levels, then breakout would lead us to take fresh long entries. Shorting is not something which we are interested in crude oil, and we should not be looking for any short trades. Taking long trades only after higher conviction is advisable on oil. We should not be looking for fresh shorts. It would be very big mistake. If it went against you, it can really blow up. Now we have seen all the forex, all the gold and silver, Bitcoin, Euro USD. Next, let's move towards our next segment, which is forex, and let's look at how forex is doing. Starting with USD CHF. So on daily time frame, this is a nice price structure which we were thinking of initiating trade earlier, and we had already entered this trade on 23rd July. The logic behind this trade is pretty straightforward. If you look at from the higher time frame, this is the weekly time frame chart. After a long decline, this is the kind of a stressed downtrend that we have seen earlier. Price had given a breakout above it, and after the breakout, it's continuing in an up move. So breakout above 0.8124 has given us another opportunity for us to take fresh longs. So you can clearly see after retesting this level, price had consolidated within this range. And after the consolidation is over, it has again given a breakout above 0.8151. So now there's a very high chance of USD CHF to continue further in the upward direction. And also the main catalyst for this kind of moves on every forex pair which has US dollar as its base currency is because DXY as an index is in itself a very big up move. If you look at from the weekly time frame, you can clearly spot a very big up move loading here on DXY. This is a rectangular formation that price has formed at the support level. This this has turned out to be a reversal formation. Clearly, price has given a breakout above a resistance. So this was the decline. Price consolidated within a range, and after this consolidation, it has given a breakout. So now after the breakout, we generally expect a continuation, right? So it can continue up until the level of 125. And the timeline for that is, upcoming 2 to 3 years. I know it's pretty big timeline, but if you take the inference from DXY chart and put it on the chart we had seen just earlier, like on USD CHF, if DXY is going to, or if DXY is expected to rise so much, then obviously every forex pairs that has US dollar in its base currency should also be expected to give a big up move. So on similar lines, if we see US dollar to rise, if our outlook is US dollar is going to rise for upcoming 1 or 2 years, so we should be looking for long entries only. On every decline, we get some really good opportunity to take fresh long entries on USD CHF. And adhering to that outlook, we took long entries when price consolidated and gave a breakout above this level. This trade is currently active and it's expected to achieve our targets within upcoming 1 or 2 weeks. So it's a pretty nice trade and it's going in our favor quite beautifully. No fresh entries are advisable right now. Wait for the consolidation or at least a correction. And only after the correction, you should be, uh, if you are interested, you should be initiating for fresh longs. At this level, if you try to take a fresh long entry, there is no any good point to keep your stop loss. This is the only level which I see as a significant level where you can place your stop loss. If this is the level which you are using going to use at a stop loss, then your risk reward is not going to favor you. So yes, this was USD CHF. Next we have Euro CHF. On this price chart, also we have seen a good up move and a breakout above this bearish trend line. Let me tag it as a bearish. Yes, this is the bearish trend line which price gave a breakout from, and after the breakout is moving in an upward direction, which was expected. Now for fresh entries, we want some consolidation or at least a correction. This is very steep rally. We cannot be possibly taking any long trades if this price continues in this way. We need some correction, and after the correction, if price consolidates within a narrow range, and if it then give a breakout above that range, then that should be our ideal uh, place to take long entries on Euro CHF. So yes, outlook on this price chart is also very bullish. This is the rising trend line which is supporting this price chart. If price starts to correct, then we would be waiting for price to retest this rising trend line. At the vicinity of this rising trend line and the confluence of this support zone, which was earlier acting as a resistance, let me rename it as a support. If price retraces and come to these levels, then I would be interested into taking fresh longs. Otherwise, uh, I'll wait. I'll wait till price retraces. This was Euro CHF. Next we have GBP odd. On GBP odd, price has given a correction for the previous upswing. This is the daily time frame price chart. Price has shown a correction for the previous upswing and it has got some support at this purple rectangular drawing that we had drawn here. This is essentially the zero point 0.5 and 0.618 level of Fibonacci ratio of the retracement. If you measure this complete upswing on a Fibonacci retracement tool, then this level would come at zero point 0.5 and 0.618. So this is the level which is generally known as a reversal point for every retracement. So this is the point from where we was expecting that price will give a bounce back, taking support of this rising trend line. If it does give a bounce back, taking fresh entries should only be done after the breakout of point 1.9401. This is the level. If price gave breakout above this level, then initiating fresh long entries does make sense for the target of 2.0117. This is the easy move that price might give if it gives a breakout above this level. This is a long consolidation. Price is consolidating since February 2026. So it's been around 4 to 5 months. Right. It's 5 months since price has been consolidating below this resistance zone. And if it give a breakout, it can be significant one. So keeping your stop losses at a very reasonable place, you can initiate this entry at the time of this trade when at the time when this trade will get triggered, we'll be recalibrate our stop loss level. Just as an initial, we have kept our stop loss at 1.8993. And the logic behind this trade is definitely on a higher time frame. This is the almost a decade long rising trend line, and price has taken multiple support of this rising trend line in the past. Like it's intact since 2012. And after price has taken multiple supports, here also you can see price has taken support of this rising trend line at the confluence of the support zone. This is the demand zone from where price has seen repeatedly buyers pressure, and from here at this level, when price has started to give a bounce back, yes, when price has started to give a bounce back, this bearish trend line is supposed to be give a breakout from, and price has already given a breakout. It's just taking some time to continue its up move. And the ultimate move is going to be in the upward direction. There's very less doubt about it. We are almost certain that price is going to continue in the upward direction. Next, we have odd JPY. Yes, this is a bearish move that price has shown. However, we were expecting this kind of move. If you look at from the 4 hourly time frame, the price has already started to lose its momentum. After every breakout of the previous swings high, it was not achieving some significant high. Uh, and clearly, this is a stretched up move. And after this stretched up move, we were expecting a decline. However, taking short entry is not something we were comfortable with because of the big momentum that price was showing. And on every JPY quoted pair, we have seen this multiple times that every most of the time we take long entries. Taking short entry is something which we don't prefer on JPY quoted pairs because most of the time we had a standard incorrect on those trades. There is a natural biasness on JPY quoted pairs on the bullish direction. So if you look for long trades on these kind of pairs, then there is a very high probability of you succeeding on those trades. Let me erase this rising trend line. And currently it's consolidating within this narrow range. This is the current range. After consolidation, if price gives a breakout above or below this range, then we might see some big moves. But longer the consolidation, higher would be the conviction. So let the price consolidate within this range for some more time. If it takes some time and after that, if it gives a breakout on the lower direction, then we can think of taking short trades with our very specified risks. This is definitely a big up move, and price might show some correction for this rally. But there is also a second stance that it might give a breakout and retest this level, and only after the retest it might start to give a show some correction. So there are two way in which you can think, but it all depends on how price structures are formed. End of the day, we are going to take decision according to that only. This is odd JPY. Let's once move to the gold and silver and let's see what how they are doing. Yes, gold has decided to, I think, move in the upward direction. And yes, we would be out of the trade if it hits. Yes, we are out of the trade. 4033 is the level which gold just hit, and we are now out of this trade. At cost to cost, we have uh, covered our shorts. There's no loss and the no profit. Silver is again trying to bounce back from this support one. If it gives a breakout above this, then I mean, ideally we should not be looking for long entries, but is looking at the big decline. You might try this uh, breakout trade here, but the target you cannot expect more than, I mean, 58.32. These levels are the only target that you can expect. Other than this larger target, I don't think we should expect here on silver. Yes, let's get back to our Forex segment. This is odd NZD. This is the continuation trade that we entered on yesterday, where after the breakout of this level, we were thinking of taking fresh longs, and when price gave a breakout above this consolidation, we initiated this fresh longs, and currently it went really, it went till half of the expected target. And again, after reaching that level, it again took reversal, and it has came within this negative territory again. Since it has already given a breakout above it, we are confident that this is again going to face reversal from the lower levels, and it's again going to continue in the upward direction. So odd NGD taking long entries does make sense, and currently it's not appropriate here to initiate your fresh entries. Let price consolidates, and if it gives a breakout after that, then you can think of taking fresh long entries. The reason why I say that is, if you are initiating this trade right now, then you have this opportunity to wait for price to give a confirmation to you to take the long entries from this place. I mean, we had already entered this level, entered at the very confirmed level. This was the level which was very confirmed, 1.2089. And after this level, price went really within this trade, and now it's correcting. After this correction is over, we are expecting this price to move further in the upward direction. So on odd NGD, we would be holding this trade for realization of this target at 1.2158. Let's check out one more thing, which is Fibonacci retracement of this previous downswing. Whether price is facing rejection from that important levels, or it's just that normal price structure. Yes, this is 0.618 level from where price has faced a strong rejection. So after this kind of rejection, I mean, it's hard to say whether price is going to continue in the upward direction or it's going to return back to the lower levels. If it does return back to the lower levels, we have our stop losses placed, so we should not be worrying about that as well. But yes, we had entered this long trade because of this bounce back impression. Like, this was the bounce back which price had shown earlier, and after this bounce back, when in the past, when price has shown this on 25th March, price has given a really big rally from that level. So similar to that, I mean, we were actually expecting from this level, and price did give a rally, but it seems like it's again getting correction, starting a correction for this big up move. If this corrects till this level, I mean, this is the first support, and rightly so, we have placed our stop losses below the important low, which is uh, here on this price chart is at 1.2050, and below this level we have placed our stop loss. So if price return back to the lower levels, there is a very high chance that price is going to face some support on upper levels than the level at which we have kept our stop loss. So let's see. Looking at the setup, it's quite convincing, but we have to wait and watch how it unfolds. Next, we have Euro JPY. On Euro JPY, price is currently moving in a bullish structure. This is a higher highs and higher lows structure. And after forming a newer high, price is currently retracing. and kind of trying to retest this rising trend line, but it has not retested it yet. After the retest, if it gives a breakout above 186.737, which is the previous swing's high basically. If it gives a breakout above this level, then we might want to take a fresh long entries, I mean, on the very bullish direction. Looking at the price structure, since I just mentioned that every JPY quoted currency pairs generally has this tendency of reversing back again to the bullish direction. And this is the repeated phenomenon on the price chart. You will see that after every big decline, price again return back to its higher levels. So yes, that's something very interesting. And if it gives a breakout of this neckline comfortably, already it had given a breakout, but currently it's retesting. After the retest or a pullback, if it gives a breakout of the high that it had just made here, then this would be a continuation trade and price might retest this previous swings high. I mean ultimate high of 187.954. So and also this is a, I mean if I were to connect this all the way till these levels, then this would be considered as a double bottom formation. Double bottom formation is generally expected when after a big decline price is forming, getting bounce back from the very same level. Here also, this is bouncing back from the very similar levels, but the only difficulty is this is the, I mean, we have not seen any significant decline below before this double bottom has formed here. So this is the only problem on this structure. Otherwise, if it gives a breakout above it, it has the potential to retest 189 odd levels. Yes, this was Euro JPY. Next, we have Euro GBP. And let the price render first. Yes. On daily time frame, we are expecting an up move, which might retest this Fibonacci retracement zone here. And after the retest, eventual price move that we would be expecting would be on bearish direction for sure. But looking at the price chart, taking a long trade does make sense. It's a pullback trade. I mean, after the big decline that we saw when price broke below this huge structure that it had made for around a year. After this big structure, when price broke below this level, this was the neckline intact here. After the breakout, it's just a pullback, and pullback is supposed to get reversed and move in the prior direction. After it gets reversed from this level, there's a very high chance that it's going to again continue in the lower direction. I mean that's the trend that price is following from very long time. If I were to place put some you know path here, then this is the path that price is following. After forming a new low, it's just a pullback which would make an lower high than the previous swing's high. And after that lower high, it's again going to make a newer low. So this is the kind of a structure that we are expecting here, that after forming this new low, price is going to make a lower high than the previous swing's high. And after that, it's going to continue further in the lower direction, breaking the previous swing high. So this is again going to be a nice structure from pure technical point of view. I mean, I would not be personally interested into taking long entries here. I'd be rather looking for reversal signs when price is about to reach this retracement zone. If price reaches this retracement zone and if it starts to showing some reversal signs, then I would be more interested into finding some short setup. Yes. So yes, and also structurally, it has it seems like price has slowed down. It was earlier forming some really big swings on the upper direction, but now it seems like slowing down. It's not being able to achieve any significant newer high after breaking out from the previous swing high. After you can clearly see after breakout from this level, it has reached a newer high which was significantly higher than the previous swing high. Let me draw these levels here. This was the initial, bullish enthusiasm on this price chart. And the second time when it gave breakout, it just reached these high. I mean, you can clearly see how diminishing highs price is making. After every successful breakout of the previous high, price is not being able to achieve the extent of highs that it once used to at the initial at the time when this trend initiated and when it started. So this is the reason for me not being very confirmed about taking fresh longs here on this price chart. Next we have Euro USD, and this is the daily time frame price chart. Let me erase all these drawings to remove all the clutters. And now you can clearly see this is the bearish trend structure where price is forming lower lows and lower highs. Currently, after forming this low, when price gave a pullback, it took quite a lot of time to reverse back to the lower levels. And rightly so, there is a very strong reason for that. If you look at from a broader time frame, it's a daily time frame. Uh, Around a year long demand zone has got given a breakout. I mean, this was the year long breakout demand zone, which price gave breakout on 22nd June. On 22nd June, when price gave a breakout, after the breakout, it was a pullback for the retest of that breakout level. And after the retest, now currently price is again continuing in the lower direction. This is the confluence of this bearish trend line and the horizontal resistance zone. At the confluence, there was a very strong bearish pressure, because of which it started to again continue in the lower direction. So looking out for the breakout rates is the ideal uh, setup here. We should be looking for fresh short entries. Most confirmed and the safest entry would be the taking shorts below this green candle's low, which is 1.1324. If I were to put a horizontal ray here, yes, this is the level 1.1324. Below this level is the safest point to take fresh shots. But yes, if you are entering at this level, then you have to keep your stop loss at the level of 1.1480. So it would be like around 150 pips, 160 pips stop loss, which might not be very feasible for many of the traders. So, and also it's not necessary that you need to keep your stop loss at these levels. At the time of entry, when the this price will get triggered, at the time of that, you should be looking for some consolidation here. Uh, if price had formed some structure here, like if it had consolidated here for some reasonable amount of time, then keeping your stop loss above that consolidation would be an ideal situation for initiating fresh entries. So yes, our outlook is definitely on the bearish direction. We would be looking for fresh breakout trades, or on every pullback we can take short entries. Sell on rise is something which we are looking forward to on Euro USD. And next we have Euro NZD. This is again an interesting chart. If you look at from the 4 hourly time frame, from the very same place, price has shown multiple bounce backs. Like you can see, this is the this is almost like fifth instance when price is taking bounce back from this strong demand zone. And similar to what price had shown after a bounce back in the past, we would be expecting here also. Like after a bounce back, price has generally reached this level of 2000, sorry, 2.023 level. This is the level. If I were to take an on an average, then price has managed to reach this level. So taking a conservative target, I'd be interested into taking this long setup, this long entry here after the breakout of 1.9727. This is the level here. If price gave a breakout above this level, then I would be looking for long entries. Our stop loss would be below this red candle's low, which is 1.9620. I'd be taking some leeway to keep my stop loss so that it don't get hit by some fake breakouts. And yes, this is a nice setup. Price has already formed a kind of a reversal formation here. This is a cup and handle formation on a very small time frame. Cup and handle formation generally are known as a formation of reversal. If it occurs on the higher time frames like weekly or monthly, then it has the maximum significance. However, on 4 hourly time frames as well, it's not that it's not going to have any significance. It's definitely going to be a breakout thing. And if it gives a breakout above this level, then there's a very high chance that it might continue till our target level at least. We have kept this target level after you know after good analysis. The reason behind that is also something which I am going to explain now. If you consider this downswing as a first trade, if this is a downswing, the correction for this downswing is expected to retest this 0.618 level. So I mean, you can clearly see here price is expected to retest this level. And while price continuing its up move, there's a very high chance that price is going to reach our target. Next we have odd USD. Next we have odd USD, and price is currently consolidating, taking the support of this level of 0.6963. This is a strong level, and from this point, price has taken multiple bounce backs. This is almost the third instance when price is taking a bounce back from this level. And after this bounce back, our target would be that price is going to give a breakout on the upper direction, or a, I mean, if it gives a bounce back from this level, then this can be a nice place to take a long entry. Since this rising trend line is intact here, we can rely on this rising trend line as price has shown multiple bounce backs. So we can also expect a bounce back after price has retested this level. This is the path that we had drawn earlier, and following to that very path, price is currently forming its structure, and it's expected to continue following this path. Like if you look at from the daily time frame, this is the bounce back that we had shown earlier, early in this month, when price gave a breakout above this bearish trend line and had formed this rising, bullish structure, making higher highs and higher lows. And now this is after this correction is complete. This is basically the correction for the up move that price has shown. After this is completed, we might see a breakout on the upper direction. If it gives a breakout above this high, then we should be interested into taking fresh long entries above this high. This is a nice consolidation here. After giving after the bounce back from here, if price breaks this uh, resistance zone here, then after the bounce back, it might retest that level, and after that, it might again continue in the upper direction. So our ideal entry setup would be looking for bounce back trades at this vicinity on smaller time frames, like on 30-minute time frame, if price consolidates here on a sideways direction, and if it gives a breakout, then that should be our point of interest at this moment of time. And especially if it occurs above this bearish trend line, because on a smaller time frame also, if you are aligning your view with the higher time frames structure that price has formed, then that would be really nice from the point of view of multi-time frame analysis, and chances of that kind of trade working out in your favor is generally very high. Next we have USD JPY. Yes, it has again stuck at this level of 163.990. Maybe it's because of the pressure that's been exerted by Bank of Japan. I mean, Japanese central bank and Japanese governments are not thinking of further letting the value of Japanese yen to decline. They are trying very hard to conserve its value, and for the same reason, we have seen multiple instances when Bank of Japan on the coming on the open market has dumped the US dollar in millions just to safeguard the Japanese currency value for a few days. I mean, you can just imagine the kind of decline we had seen on 2nd July. This is 0.91% decline on USD JPY pair. And after this decline, price had regained this complete high within the next 4 days. So this is the kind of move we are expecting when we speak about USD JPY. And it's never ending. If you look at from the higher time frame, let me show you on monthly basis. Price is in an uptrend since 2012. I mean, it's been almost like a decade and a half, and it's about to retest this level of 164.5, which is again a 40-year long breakout. And if you look at from uh, this perspective, price is going to retest this level of 164.50 after 40-year long period. Like on 1st October, on October 2000, 1986, price was at this level of 164.5. And after this 40-year journey, price has again returned back to its higher level. If it gives a breakout above it, then we all know what's going to happen. We might see USD JPY at 220, 225. That's the speculation which big Wall Street analysts are expecting. But I really doubt that. The reason behind that is also very simple, that Japanese governments are again thinking on the lines of rate hikes. If rate hikes is going to be a reality on Japan, then it's very rare that price is going to remain trending on the upward direction, especially this USD JPY pair, because uh, every rate hikes, currency gains its value. And since here the Japanese yen is a quoted currency, so if Japanese yen gets value, if Japanese yen gets their value appreciated, then USD JPY pair tends to decline. So this breakout level might act as a strong resistance, a 40-year long resistance, which might reverses this humongous up move that we had seen in recent days. So yes, taking a long entries here at these top levels might be very risky at this moment of time, because we have seen it multiple times. Whenever a price tries to breach some important critical levels, generally Bank of Japan enters on the open market and they try to dump US dollars on and create an artificial demand for the Japanese yen. So that might occur, and it might catch you with a surprise, and that might not be very pleasant experience for you. So you can avoid USD JPY from the taking trades, as I'm also not very interested into taking long trades or any trades on this kind of pairs where the price structure is very biased. Next, we have CAD JPY. Next, we have CAD JPY on this price structure as well. We have seen on 4 hourly time frame prices forming higher highs and higher lows. It had given a breakout above 115.776, and after the breakout of this level, price has formed a double highs. I mean, price had made a high, it had given a breakout from that high and made a newer high. So the structure is very bullish according to me. And with this kind of a structure, you should be looking for long entries. However, price is currently taking a rejection. I mean, it's showing a retracement for the previous upswing. And I genuinely feel like price should continue this correction till it retests this rising trend line. If it does so, then we would be looking for fresh long entries. Trying to capture this small window here that we are expecting is not a right thing, because taking a short entries at these kind of super bullish, highly momentum forex pairs would not be a very uh, right thing to do. So instead, you should be holding back and waiting for your right opportunity till this price reaches this rising trend line. And only after this, if you find some consolidation and then break out, then that should be an ideal entry point for CAD JPY. Immediate resistance after the breakout of this level, if it does give a breakout, then immediate resistance could be seen at 117.07. So this is yet another big resistance zone here, and it's an ultimate one. I mean, this is the resistance zone which is intact since March 9th, and it's working pretty well. It's rejected price. It has rejected price multiple times, and at least two times in the past, it has rejected and prevented price from going further up. So this time also we should be expecting same, that upon reaching of this reaching at these levels, CAD JPY may face a strong sellers pressure. So yes, our outlook is definitely on the bullish direction right now, but taking long entries should be dependent only after price giving some deep corrections. And after that correction, if it consolidates, then only the breakout rates is something which we prefer. Next, here we come with GBP USD. On this price chart, we have our sentiments on the bearish side. Let's look at the price chart. This is daily time frame, and currently price is showing a correction for the previous upswing. This rally that you see here, which started on 24th June and it lasted till 15th July. So it's around 20 calendar day rally. After this rally, it had started to give a correction, which is pretty kind of a healthy thing on any price structure. After this correction, the ideal expectation should be price to give a reversal from this level and continue in the upward direction. That's the ideal uh, situation. But since it has given a big downward rally, call it a correction, we should be waiting here for some consolidation, because price really do not move in showing an up move and directly started to show some bearish direction. This kind of moves is very rare when price do not consolidates and move directly and shifts directly from the uptrend to downtrend. There is a midsection that generally gets missed, which is while transitioning from a bullish trend to bearish trend. There is a phase when price consolidates. That's called sideways range. So that's exactly what GBP USD is currently doing. After forming this low, price is currently, it seems like it has lost its momentum on the bearish direction, and it has started to consolidate in a sideways direction. If this consolidations continues for some more time, then breakout of that consolidation in the upward direction would be our ideal situation for us to look for some good buying opportunities. If you look at the price structure, let me put a path here. This is essentially what you are looking at. This is the decline, and after this decline, price has shown a up move, which has given a breakout above its significant high. So this is confirmed that this is going to be an up move. It's not a fluke, or it's not a correction for this previous downswing. It's not a corrective rally for the previous downswing either. So after this up move, price has shown a decline. So after a decline, if it gets reversal from here, and since it has already made a previous, it has already at a level which is higher than the previous swings low. The criteria of forming higher low is already satisfied. And if it gives a breakout above previous swings high, which is at this level, then the second criteria of price need to form a higher high than the previous swings high. That would also get confirmed. Then breakout of this would lead to continuation of its up move. So long story short, I would like to just reiterate that this is a bullish trending GBP USD, which is currently facing a correction for the previous upswing, which is about to get reversed. This is at a reversal point, and if it reverses, then here we'll have some really good buying opportunities. This was earlier acting as a resistance, but now it's working as a strong support. As you can clearly see, this is the red candle, kind of a rejection candle. Price has rejected its move on the bearish direction. So yes, this is a support. Next we have NGD USD, and we have already entered a fresh. I mean, this is the short entry we took on 22nd July on the live uh, program, obviously. And let me explain the logic behind this trade. On daily time frame, this is the bearish structure where price is forming lower lows and lower highs, similar to what I just explained on GBP USD. And upon this reversal, I mean, this was the corrective rally for the previous downswing. This is clear. After this rally, price got rejected from this Fibonacci retracement zone. I mean, this is 0.618 and zero point 0.5 level of Fibonacci. And from here on, price has started to show some rejection, following to which we found a head and shoulder formation or a topping formation. It's not head and shoulder formation. Uh, it's kind of a topping formation, seems like a double top. We found this structure on a 3-hourly and 2-hourly time frame, and below that structure's low. I mean, this is the support zone. Below this level, we initiated a fresh shorts with the stop loss of the top's high. I mean, this is the double top, and the highest point of this top was at 0.5872, and we have kept our stop loss at 0.5874, keeping two pip as a leeway for if there is any mishappening that might unfold. So yes, with this, price has already covered more than one risk reward. It has already moved in our favor more than we have risk in this trade. And now it's expected to continue further in the lower direction. However, just a point of concern that it has made a double bottom again here. So let's see how it goes. The chances are very high that price is going to continue in the lower direction. For fresh entries, there's still there's no sign of consolidation at a very narrow range until price consolidates and at a narrow range, that the kind of consolidation we have seen earlier, we cannot really initiate any fresh shorts here. So yes, we have to wait here till it reaches our target, or at least if it gives a breakout below this, then I mean, it's still very early to say anything. I mean, on NGD USD, you cannot uh, take fresh shots here at this moment of time. It has already came a long way. Let me recheck its complete upswings Fibonacci retracement scale. Yes, this is the complete upswing from its previous swings low till its high. And if we measure this, what you will find that it's still, I mean, 0.5 and 0.618 level, which is considered as a strong reversal zone for any pullbacks. It's still very far. So a big decline, a big down move is still pending here on NZD USD. That is something which we can confidently say. So it might retest this 0.618 level very comfortably. It's just that it's consolidating uh, it's taking some time till it reaches our ultimate target. So first target is already met. As I have said, price has already moved 1:1 in our favor. So this is the time, this is the point where we uh, book our some of the profits if you would like to have. This was a nice trade on NGD USD. Next, let's move towards USD CAD on daily time frame. After the big up move that price has shown in the past 2 months, in the month of May and June, this was a humongous rally that we had seen. And after this big rally, which had given a breakout above this is important resistance zone and yet another resistance zone of 1.4140. After giving the breakout above all these two, price has consolidated and had returned back to the lower levels. This is a correction for the big up move that price has shown. After this correction, uh, the ideal thing should be price should be continuing in the upper direction. But the question is whether this consolidation is still completed or not. If it's in the middle of this consolidation, this retracement is even not completed. This is what I feel. After giving this retracement, price has again started to move in the upward direction. And now this rally seems like a corrective rally for the previous downswing. Like this is the downswing, and for this downswing, this was the corrective rally. And after forming this corrective rally, price might continue further in the lower direction to form this complete, downswing, and might retest this level of 1.3942. And upon retesting this level, when it again take reversal from this level and again it starts to move in the upward direction, then that would be our ideal situation for taking fresh long entries. But initiating longs here does not make sense. Let price consolidate, and only after the consolidation, if it gives a breakout on the upper direction, then that should be our ideal situation for taking long entries. Next, we have NZD CAD. Yes, on this price chart, we have clearly seen rejection from a resistance zone. This yellow zone that is visible here on chart, this is a resistance zone. And from this point, you can see this. There is a 4 instances in the past. This was the first, second, third, and the fourth. Throughout these 4 instances, price has shown similar formation and similar structure. After every rejection, it has shown a big downswings. Here also, after price has got rejected from this level, price has declined. And now it seems like it has given a breakout below this rising trend line, which is yet again a confirming factor for us for the case on the bearish direction. Like if we are thinking of the trades on the bearish direction, then we need to collect some of the evidences that supports that thesis. So if we are looking for taking short trades, we should be looking for the evidences that supports that. So price has faced rejection. This is the first support. Second support is price has got given a breakout below this uh, rising trend line. This is the second evidence. And the third evidence is after the breakout, price has again got retested this trend line at the confluence of this horizontal resistance. And again, after the retesting, it has again started to decline. If it gives a breakout below this low, that would be our ultimate signal for taking fresh shots on NZD CAD. So looking at the price chart, it seems quite convincing that below that, below this level, we might see price to give a, you know, form a really big downswing. We have kept this stop loss here as an tentative way. If at the time of this our trade getting active, at the time of trigger, we'll see if we find some really nice consolidation at lower levels, then we would train this stop loss to that level for while initiating our fresh shorts. This is just a tentative figure. If we couldn't find anything, then this is the ultimate stop loss where we would be placing. This is going to be a 1.66 risk reward trade for NGD CAD. So yes, this is a nice opportunity. Sorry, that was next. This is NZD JPY, and this is again a short trade that we had initiated here. And this trade we took was on 23rd July, and since then it's still active. And even after price had given a upswing, and it was about to hit our stop loss, it reverses again. It got a reversal, and it's again now continuing in our favor. On daily time frame, if you look, this is a kind of a consolidating range which is intact here. Price is facing multiple rejections from 95.223, and from on the lower direction, on the from below, price is facing multiple bounce backs from 90.94 as a support level. So following to this, I mean, taking the reference from previous two swings where they got rejected, I was preparing for this rejection. Whenever price shows this rejection, I would be looking for fresh shorts. And following to which, it has formed a nice head and shoulder formation, which is again a reversal pattern. So it has made our view even stronger for the bearish direction, for the bearish directional move. And after the breakout of this head and shoulder, we can safely initiate our fresh shorts. Even if you think this has already given a breakout, price is currently trading at a higher level. I mean, than the level which at the same level where it initially started. So if you want to take a fresh shorts here, then you should be waiting for price to give a breakout below this green candle's low, which is here 94.36. If it gives a breakout below this, then you can take fresh shorts with a stop loss of 95.054. So yes, this can be a really nice trade, and there's a very high chance that this might continue in the lower direction, and this might be a very profitable trade as well. This is a clean price structure. There is no any dramatic moves or consolidations. Price has shown a clean up move, formed a head and shoulder formation, and now it's showing some reversal signs. So it's not going to be that difficult of a move, according to me. So yes, there is a fresh shorting opportunity here for us, but that lies below this level of red candles low, which is here at 94.36. Next, we have GBP CAD. And yes, on this price chart also we have our trade active, which is currently moving in our direction, our favor. And the logic is very similar to what we saw on NZD CAD, where price was facing multiple rejections from a very similar rejection joint, rejection point. It was a strong supply zone. And similar to it, we have found another supply zone here on GBP CAD. Although this is not very clean, but yes, one can clearly observe that price has faced multiple rejections after every swings on the bullish direction. So it was kind of a consolidation after a big upswing. And after this consolidation, it has given a breakout below it. Following to which, what has helped us to gain confidence on this short trade was the breakout of this bullish trend line. This bullish trend line got taken out, and after this trend line got taken out and this support formed, the support also given a breakout on the lower direction, which has uh, after all convinced us to take fresh shots here. So now yes, we are holding a short trade here. We are expecting first target uh, as 1.8643, and below this 1.8520 is our second target or ultimate target for this trade. Initially, we have kept our stop loss at 1.8938. Below this level, if price continues in our favor further, then we might want to trail our stop loss further on the lower direction. Although trailing opportunities we have right now, we can trail our stop loss till above this high, but currently I'm not interested into doing so because we would be interested into trailing our stop loss if price form a new low and make some closing there. Price has given a breakout below this previous low. There's no doubt about it, but it has not closed yet. So on closing basis, if it gives a breakout, then that would be more convincing for us to trail our stop loss. So yes, GBP CAD is short for us, very bearish, and sell on rise strategy one can apply on this particular pair. Next we have GBP JPY, and yes, this seems. I mean, if it would have been some any other pair, then I would have shorted this at this level. But since this is a JPY quoted pair, the bullish biasness is very evident on it. And taking short entries is very kind of not very convincing. On daily time frame, this is a non-stop bullish move. Price is forming higher highs and higher lows, continuing till it had reached till this level of 219.614. After reaching this place, this level, price has given a kind of a correction or call it a pullback. At this pullback, price has started to consolidate within a range, and we were expecting this. If this range gives a breakout on the lower direction, we can think of taking short trades. But when it did give a breakout below it, we were not interesting because this is kind of not confirming. If it would have some substance on the bearish direction, then this might would have continued on the lower direction. But since even after a breakout, it has taken a reversal and went for a retest. Let's see if this retest, after this retest, if it reverses back to the lower direction or not. If it does reverses back to the lower direction, then we can again take entries on the pullback, like below this red candle's lower wick. This level is 217.86. Below this level, we can initiate fresh shorts, but for that we need some consolidation here. If it consolidates here for some considerable amount of time, then below this level uh, could be a fresh short entries opportunity for us. And this big green candle that we had saw that we have seen on 15th July, this again seems like a very stretched one. This seems like an exhausting candle where price has given all it had, uh, on the bullish direction, and after getting exhausted, it kind of started to shimmer down on the bearish direction and started to move on the sideways direction, given a breakout below this bullish trend line. So yes, bearishness is very clearly visible on the price chart, but the only problem which I had is this is a JPY quoted pair, and Japanese quoted pair is generally known for showing some really persisted bullish moves. So that's the only thing that's not very convincing for me. Otherwise, setup seems quite fine to me. Next, we have odd CAD. This is odd CAD pair, and on weekly time frame, yes, there's another formation of a supply zone. This is the same level from where price has got rejected multiple times. You can see this is the first rejection, second, and currently price is again facing a kind of a rejection. Currently, it's resisting, and if it gives a breakout below this, uh, you know, black ray here, 0.9723, then this rejection would get confirmed. We are looking forward for a short trade here if price gives a breakout below this, because we have seen this multiple times in the past. At least two instances we can recall that price after getting rejected from this level, it has shown really big downswings. So similar thing we are expecting here if price kind of form this formation completely, and then if it gives a breakout below this uh, 0.95 0.9723, then there will be a interesting setup for us to take fresh shots. This short entry would be for the breakout of this consolidating range along with the breakout, I mean after the breakout of this rising trend line. These both criterias are met. Whenever these both criterias are met, generally there is a reversal that's about to unfold. So that's what we are actually here aiming for. So yes, our outlook is going to be on sideways to bearish direction on odd CAD for the days to come. Next we have Euro odd. This is Euro odd pair where price was forming a bearish trend line and it was getting rejected from this bearish trend line multiple times. This was the first, second instance, and this is the third instance when it got rejected. And after the rejection, overall structure seems quite bearish. The only bullish thing on this price structure is this: there is a presence of a strong support. At this support level, we can think of taking long trades as price has shown multiple bounce backs in the past. So after getting rejected from this bearish trend line, price was kind of falling, following to which it had given a breakout below this important support zone. This was a support which has earlier acted as a support. We were expecting that this is again going to act as a support, but it has given a clean breakout below it. Price has consolidated below this support zone, taking resistance from the earlier support. Now, after this support, when price gave a breakout below this consolidation, then we initiated our fresh shorts with the stop loss above this the consolidated consolidations high. And with this outlook, our view is still in the bearish direction. We are expecting this price to continue further in the lower direction. This is just the retest of this resistance. After the retest, it's going to return back to the lower levels. And if it does, it won't take a lot of time till it reaches our ultimate target, because this is the tendency which price has shown multiple times. So now also we are expecting price to reach at least 0.6130 and at max 0.6063. So yes, this was our outlook for Euro odd. Our outlook remain on the sideways to bearish direction. For fresh short entries, you can think of taking breakout rates, as there is yet another opportunities as price had gone to retest its immediate resistance. So you can initiate your fresh shorts below these levels. And this is a nice place where you can think of taking uh, fresh shorts if it gives a breakout below it. So with this, we have came to an end for our Forex segment. We have seen almost like 20 Forex pairs, and we have seen all the opportunities that are evolving on each pairs on higher time frames and as well as on the intraday time frames. So now let's move towards gold and silver again, and let's see how price is performing on those commodities. Let me erase this chart. Yes. This is 30-minute time frame price chart of gold. And two major thing which I am currently noticing here is, first, price has got rejected from this immediate resistance. Not immediate resistance, this was a strong resistance, I should rather say. Let me rename it. And after facing rejection from this strong resistance, price had returned back to the lower levels. I mean, this is a very clean setup where initially price had formed a kind of a head and shoulder formation after a big up move, get given a breakout below it, came to 4022, has risen again, retested 4116, came again to retest this level of 4022. Now the question is, after that the price has retested 4022, what could be the moves from this level? So for that, we need to look at from the higher time frames. Like if I were to move to the 3-hourly time frame, and let me erase all these drawings. Yes, now it's very clean. On 3-hourly time frame, if you zoom out a bit, you can see, as you guys are already aware of, price was showing clear downtrend from a very long period of time, at least 4 to 5 months, uh, all the way from January itself. I mean, gold made its all-time high in January, and since then, gold is declining. And currently, it seems like this decline has came to an end, because this is the low which is intact since 24th June, and price is not being able to break this low further in the lower direction. And also, from the momentum point of view, it seems like gold is slowing down on its decline, because after every downfall, I mean, after every decline that gold has shown, price, when it had given a breakout below its previous previous swing low, the newer low that it had achieved is significantly lower than the previous swings low. Let me show it to you with this drawing here. This is 3-hourly chart. This was the previous low that price had given a breakout of on 5th June. And upon breakout of this level, you can see price made a newer low which was significantly lower than that previous swing low, and this the distance between the newer low and the previous swing low was around 8%, 7.75%. Okay, and let's continue this phenomenon in the future. Like when this low got taken out, price made a new low which was just below 1.6%. Fine. Now, if I were to continue this further, I don't see any further newer low. Okay, fine. We have found a newer low which got formed here. When price gave a breakout below this green candle's low, it had made a newer low which was just around 0.38% lower than the previous swing low. So this is what I am exactly trying to say, that whenever, uh, as and when price has moved in the future, like it has continuously making lower the momentum, the strength of the gold is declining as it's being able to achieve significantly lower lows than the previous swing low. Like this is the diminishing situation here. Because of this very reason, the outlook for gold has slowly shifted towards the bullish directional view. And after the breakout of this major bearish trend line, which was intact since very long period of time, the outlook has now shifted towards the bullish direction. And following to which, price has given a big up move, which has retested 4,166. So this was, let me check. I think Bitcoin is going to give a breakout below this. So we'll continue gold in a while. First of all, let's see Bitcoin. There's a price structure that's again threatening this breakout. I feel like price is going to give a breakout below this. This is a nice setup on Bitcoin. If this low is broken, then I don't see why price will not fall till 62,000. So after this big decline, we were expecting a pullback. Price had given a pullback, but after this pullback, it's now kind of trying to inch lower. Following to which, there is a opportunity for us to initiate our fresh shorts below this red candle's low. If it does so, then price is very likely to retest for 62,000, which is around 1,200 points below the current breakout. So let me put one more alert here so that we could get it whenever price try to breach this level. Fine, let's move back to the gold. Yes. And after the breakout of this bearish trend line, there was a shift in the sentiment that now gold has declined a lot, and now it seems like price is going to give a breakout on the upper direction. And if you want to subscribe that thought, if that thesis, then gold need to prove its worth after giving a breakout over 4,200. 4,200 is a significant resistance here. If gold gives a breakout above this level, then that's something very significant event. I mean, if it gives a breakout above it, then there's a very high chance that gold is going to continue in the upward direction, because by then the structure of this, price structure of gold would be shifted towards making higher highs and higher lows, as price had already made a higher low here, right? And if it were to give a breakout above 4,202, then it would have made some a newer high, following to which our expectation would be shifted towards bullish direction and we would be looking for fresh long entries. But contrary to what we thought of, price had not given a breakout above 4200, and instead of that it had retested this level of 4166, and from the midpoint it had started to face a rejection, following to which it has given a down move all the way till 4022. This down move was quite disheartening. It seems like price has given a correction for the previous upswing that we have seen. But after that upswing, if we consider this as an upswing, then after the correction, the second move that is going to follow this. Hi Shivam, hi brother, how are you doing? Why so late today? Great. There's nothing that you have lost, so it's completely fine. I mean, gold pay we have seen some moves, but it was not worth entering any trades. Now you might want to, take this trade on Bitcoin instead. There's a nice opportunity that's unfolding here. Today, gold caught me off guard. I mean, I had taken a short entries on gold here, although the stop loss was not hit, but I was getting this feeling that price might get a reversal from this 4022. So I exited at a cost to cost basis. As in when price reached its, I mean, I have trailed my stop loss to the level at which I entered the trade initially. So I exited the trade. Yes, Bitcoin is going crazy. I think we should consider seriously uh, for taking this short trade here. This is Ethereum. If this gives a breakout on the bearish direction, then I think Bitcoin is going to continue till 61,800. This is the level which we should be eyeing for if it gives a breakout below it. 62,992 is the shorting level. It's just down by around 1%. I mean, what do you think, Shivam? Whether Bitcoin is going to continue in the lower direction, or are you thinking for some consolidation? This consolidation to persist. Yes, here we go. Yes, we have entered this trade here on Bitcoin. This is nice 1.45 risk reward trade. This is the last support on gold. According to me, if price gives a breakout below 4022 confidently, and if it sustains below it, then 39.59 is the level which we are looking forward. Below this level, 39.60 is the level which price might retest in one go. I mean, I don't think this is the level. I mean, 4000 is the level which price is bothered about. It seems like gold is going to continue on the lower direction, but I mean, I'm not sure whether we should be looking for fresh short entries below this level or not. Although it does seems like a nice level to initiate fresh shorts, but I mean, yes, structurally it's straightforward. If price gives a breakout below it, then it should supposed to move to further lower levels, because this was the upswing which got rejected, and after the correction, when the second upswing which tried to breach this level, I mean, it was moving in upward direction, again got rejected on the midway, and following to which it has again retested the previous swing's low. And now upon breakout of this level, it definitely makes sense that it's going to continue in the lower direction. But I don't know why I'm not feeling that taking this trade. Yes, silver has started to decline. Now I think gold will follow. Uh, it has started to decline below the support one, and now it feels like gold might follow this decline. Hold for a second. I'll be back in just 5 minutes. Not 5 minutes, 2 minutes. So, yes, gold has again returned back to its lower levels. It seems like price is again going to consolidate and give a breakout below it. I don't think gold is going to give a breakout below it. It's going to consolidate within this range. And after consolidation and forming a base, it might again take some support and go move in the upper direction. That is something which I expect from gold. This is a strong support zone, 4022. Here, at this kind of ambiguity, the best thing is to act according to the levels. If gold gives a breakout below this low, 4017.290, call it a 4015. If it gives a breakout below it, then clear sell side entry we should be making. And if price consolidates here for some more time and then give a breakout above this immediate resistance, then we can think for taking long trades. But again, that's not the opportunity that you'll have today. That's something which I am talking for tomorrow or the day after tomorrow. Silver is again trying to regain its highs. Breakout below 57.057 was confirmed, at this level only. And since then, price is consolidating within this narrow range. I think it would be hard for silver to give a breakout below this. It might take some long time or it might take a reversal from here. And after making some, giving a correction for this downswing, then after that, if it declines, then that might be a appropriate place for silver to take short entry. Is Bitcoin, after giving a breakout below it, it has again returned back to the negative territory. Currently, it's trading at 63,190. It's going to continue in the lower direction. This is the phenomenon that we have seen yesterday also. Like during the breakout of these levels, this head and shoulder formation price was showing this uh, kind of a spikes, but eventually after this volatility gets get evaporated, the move which followed this volatility was on the bearish direction, which was its ultimate level which we were thinking. So that's something which is again we are trying to capture here. Most probably price is going to consolidate within this narrow range, and after that consolidation it's going to decline. So shorting is the only right thing that we can do here on Bitcoin. Ethereum has also given a big spike, and with that spike, it has retested this level of 1857. And after retest of the 1857, it has again returned back to the previous range. If price consolidates and give a breakout similar to what we were expecting on Bitcoin, it might continue its move in the lower direction. So Ethereum and Bitcoin both have very similar kind of moves, and the spikes we have seen is also at the very similar point. Maybe there might be some news because of which Bitcoin and Ethereum both have shown some bearish moves. Yes, on 1 hourly time frame, it's very clean. I mean, if you look at from the 30-minute or 15-minute time frame, you might be drawn towards taking short entries on gold. However, if you look at from the 1 hourly time frame, it seems like gold is clearly facing some strong supports at this level of 4,022. So we need to be adhering to that. Yes, gold is getting very strong support from this level of 4,022. This would not be that easy to give a breakout from. I mean, we were although expecting earlier that price might give a breakout below it, but now it seems like it's a strong support, and there's a valid logic behind it because the kind of big downswing that gold was showing from 22nd July till the 24th July, this 2 day downswing. I mean, this got a strong support at 4,022. So from that similar level, if we are expecting a bounce back, it's not something which is very random. This is very logical that this might has the potential for reversing the gold. Let's see how it evolves. However, we are not going to take any entries here on gold. We'll be just waiting for this price structure to continue. continue consolidating, and after that consolidation, only if we find some breakouts on the upper direction tomorrow or the day after tomorrow, we can think for taking long trades or basically the bounce back trades like the ones we took here, like on 24th on 24th July, Friday, we took a long entry here upon the breakout of this level. No, the breakout of this level, we took a long entry, and we started correct because this trade went directly to the target level, and we had uh, cashed our target. Let's look at crude oil. Yes, up until now it was trading around negative 1%, but currently it has taken some bounce back, and now it's trading at negative 0.25. So it has recovered 0.75%. There might be some news regarding this. I'm not sure. We'll have to see. But from pure technical point of view, also it makes sense for crude to reverse back because this is the 80 level. This is the level which was seen, which we had seen earlier. Also, price was taking rejection from this level. Earlier, it was acting as a strong resistance. And if you look uh, further in the past, this 80 level has acted as a strong support for some really big declines. Like at the peak of the war on Monday in March, like when Iran and US war was at its peak and there was nothing very clear, the big downswing was followed by a support at 80 level. I mean, this was the 80 level, this was the 80 level support. So the level of 80 on the price chart for crude oil does have some significance, and you can clearly observe that here also. If it starts to consolidate here at this current level, and after that consolidation, if it gives a breakout on the upper direction, then we might again see a big rally on crude oil. And every rally on the crude oil is backed by some geopolitical disrupt. So it would not, I mean, it would not be wrong to say that there might be something which might go wrong on geopolitical front, which would lead this crude oil to spike. This is the current price structure on daily time frame. Let me delete these drawings here. Yes, this is a strong, gold is going stronger now. Now that we have done with our Forex segment and all the commodity segment, gold, silver, crude oil. Now let's move towards some indices. Let's see what some of the major indices are doing. This is S&P 500. Let me delete all these price charts. Let's start fresh. This data is delayed by 10 minutes. So I don't think that would be a bigger problem now because we are anyway here trying to make sense of how price is performing. So yes, this is a S&P 500 perpetual future contracts. All these blue zones that you see, this is when market was closed, and all these narrow white ranges is when market is open. So even if the market is closed, uh, this future keep on trading on the market. That's why this price structure is continuous in nature. Otherwise, if you see the spot price of S&P 500, you will see many gaps formation. Like all these blue charts, blue zones candles would not be appear on those price chart, and you will see clear gaps. So it's better to look at the future contracts as it shows its continuous move. Now looking at the price chart, this is the clear range which is intact here, and currently price is giving its decline after retesting its resistance, and after every rejection from its resistance, price has shown its tendency to reach its support level. So this is a support level which might get retested again. This is one conclusion which we might get from this kind of price chart, that after every rejection, this is the third time when price is getting rejected from this resistance zone. And in the past two times, whenever prices got rejected, it had came crashing down to retest this support zone. This time, this downfall is not that quick, which again might hint towards that this decline or this consolidation is getting weaker, and now it might have some huge potential to further continue in its up move, continue its up move. So as of now, on an intraday from intraday perspective, we might see this move continue further till this support level. So if you look at from 2 hourly time frame, let me draw clear bearish trend line. So yes, this is a clear bearish trend line which price is respecting. This is the third instance when price got rejected from this very vicinity of this very bearish trend line. And this is a kind of a, I don't want to call it as a head and shoulder, because head and shoulder pattern generally considered to be as a relevant one if it occurs at a top level. I mean, after some significant up move, since it had occurred here after a decline, this would not have any significance with this kind of a structure. So we can just forget that this is a head and shoulder, and we'll just move uh, like this is the normal formation. We'll consider this as a consolidation. Price is consolidated here, and after the consolidation, if it gives a breakout on the lower direction, then we might see a decline, and with that decline, price might retest this support one. So this is the initial clue that we are drawing from this S&P 500 futures chart, that if it gives a breakout below this level, then it might continue till this level of 73.61, or call it a 73.60. So to capture this downfall, if you are looking forward to take a short entry, then yes, you might be correct. But again, one more thing which I want to point out here is that after forming every significant, I mean every successive newer low, price has shown this its tendency to reverting back to its bearish trend line. So after forming a low which was significantly lower than the previous one, this was the rally which we saw, which was again a corrective rally for the previous downswing. But uh, end of the day, it retested this bearish trend line. Similar thing which we saw again when price gave a breakout below this previous swing low, it again reverted back. Now here it had since it has not formed any significant low. I mean, I don't see this returning back to this. Uh, I mean, a bearish trend line. Instead of returning back, if it gives a breakout below this support zone and make some significant newer low, then we would be interested into taking some long entries. for price behavior to retest this bearish trend line. But let's forget about that. Currently, we have to look into bearish direction as price is declining. The trend is clearly on the bearish direction. So taking a short entry below this, support zone would be a nice setup. If I were to pull up a short trade setup, I would place my stop loss above this red candle's high, and I would be targeting around these levels. So this would be a maximum one risk reward trade. On the smaller time frames, if you would like to capture this, then it would be really nice if price consolidates within a very narrow range at this level. And after that consolidation, if it gives a breakout, then that would be a really nice spot to take short entry. Otherwise, currently the stop loss is at 4,000, sorry, 7470 level. So you just really cannot dodge this level. You have to put your stop loss at this level if you are taking short entries immediately. If it triggers your trade immediately, then you don't have any other way than to keep your stop loss at 7470. But if it continues to consolidate here for some more time, and after that consolidation, if it gives a breakout, then that consolidating range high would be your appropriate place to put your stop loss. So in that way, you can maximize your risk reward and minimize your risk. So that should be the strategy you should be looking for. And yes, our outlook is definitely on the bearish direction. We should be looking for short trades only. And this bearish directional biasness should be, uh, on this price chart up until it retests this level of 7360. I mean, this is the support zone. Till the time it retests this level, we should be uh, looking for short trades only. Whereas this was S&P 500. Next we have CAC 40. Let me erase all these charts. I mean, the price chart is itself very erratic. And on top of that, yes. Thanks, Sonia. Sonia Music. Thanks for your kind words. What do you trade? I mean, are you into golds or forex? Let's uh, recheck this calendar here on Forex Factory, and let's see what's the event that is scheduled for tomorrow. Tomorrow is 29th July. Yes. Odd CPI data is dropping tomorrow. So all the odd currency is going to face some really big volatility tomorrow. And along with this, FOMC is going to be out tomorrow. So tomorrow on Wednesday, there must be some really, weak overall market movement throughout the day, because at 11:30 p.m. from IST, there is a important data that's going to come up, because of which I don't think there's going to be much volatility tomorrow throughout the day. So, yes. Oh, that's fantastic. You're trying to learn from YouTube. That's great. But be very sure about the, mentor you look for. Because I have also spent a lot of time on YouTube rendering here and there, and end of the day, I couldn't get anything substantial. So, I mean, there's all glitters and glamour here on YouTube, but the real part of the trading nobody tells you. So please be aware of the fact that this is not a very, although it might seems very interesting from the outside, but I mean, it's quite opposite to the to that conscience when you actually look it from the very close lens. So please don't go with all those hyped up YouTube channels and probably and pick up some course if you would like to have deeper knowledge about it. You can also watch our channel regularly in order to understand our logic clearly. And since you are in a college, I can also recommend some books to you so that you can get some clear understanding and the authentic from the authentic source. So, yes, all the best to you. If you're still watching, Sonia, you can join our Telegram group. You can just stay there and just see how. I mean, I do regularly share my technical analysis blog post link there. You can refer to that in order to get better understanding of how to form any outlook. Yeah, sure. From book point of view, first of all, I mean, I need to know your competence on it. I mean, it would not be recommended. I mean, if I were to, suggest you some high end books, and if you are not being able to understand that only, then what's the use of it? So, from how long are you watching this kind of content, and how, convenient is that for you to, make sense of all these stuff? How long it's been since you are practicing all these? So it's been past 2, 3 months as I have just entered my first year of college. Please consider me as a beginner. Fine. So look, to be honest, I even okay. First of all, if you want some recommendations, I'll definitely do it for you. So I'll paste it on the chat itself. You can. refer to that. Okay, this is the first book. I mean, even before purchasing this book, I would recommend you to go through. There's a app called, it's a free app called Jirodha Varsity. Although it's based on completely in India, right? I mean, it's made and it's curated from the point of view of an Indian, and there you will find some Indian regulatories and all the Indian regulations. But that's pretty decent stuff to read there. I mean, I have also read that in my beginning. You can refer to that before considering of buying any books. You can refer to that, complete at least 4 to 5 modules. It's completely free, beginner friendly, and it's on various languages. Even if you don't prefer English, you can read there on many regional languages as well. I mean, it's not a paid promotion, but the stuff is that good that I cannot resist it, from sharing it. So you can consider Jirodha Varsity. The name goes like Zerodhavarsity. Yes, this is the name. And after you have completed the technical analysis module of it, I guess it's a fourth module or the sixth or fifth module. Once you have completed this module, then if you feel like confident, you still want to go into the trading stuff and you want to know deeper, then you can, consider and refer to this book. This is called Technical Analysis of Stock Trends by Robert D. Ewald and John Muggy. This is one of the few books which I have read in my initial days. I mean, before I took up CMT, I read all these, and then only I took a call that I really wanted to do that. So you can consider these, but before that, first of all, Zerodha Varsity would be more than enough for you. I mean, at least uh, along with your college, there is a stuff that would be enough for you for you know for the period of 1 month. You'll be busy with that. So consider doing it regularly, Zerodha Varsity, and only after that, if you still find trading as an interesting stuff, then you can go for this book. This book would cost around 800. I mean, you can find easily PDF also if you would like to have. But yes, this would be the right way to begin, in my sense. So, yes, I've shared you the link for our Telegram channel. Do consider to join it. Uh, in that way, you'll be keep in our touch. And I mean, reading is something which you need to be very friendly with. If you read the blogs that I post on TradingView regularly, then I think you'll get uh, more, perspective on how to make views. And most important thing is to understand the basics. And since you are already into this from past 2 to 3 months, then I think you would be pretty much capable of understanding all those blog posts. So yes, you can consider that also. And if you are free, do join our live stream regularly and ask me any question of your choice. If you find anything doubtful, then you can consider this, as a right platform for you. Is there any question, Sonia? Otherwise, uh, it's a time we would wrap up. Sure, sure, sure. Thanks to you for joining. Uh, have a great reading, I would say. Goodbye. We come live every day from 5 to 8 p.m. So just for your reference, I'm just saying this. Thanks for joining. Goodbye.